Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Wednesday, January 12th, 2022. Markets basically in float mode today. Today would be what you would refer to as a sleeper day or basically consolidation day, right? So markets did gap higher today on the back of CPI data. CPI data came in definitely showing inflation, but not really as scary as the market had thought or feared. And also, if you go to yesterday, Jerome Powell calmed the market's nerves just a little bit, basically saying that, yeah, we want to unload our balance sheet, we want to raise interest rates, we want to cut down all the tapering or bring it to zero, but at the same time, we're not going to rush it. We will back off if we need to. You know, all the right things to calm the market's selling pressure that we saw in basically the last week or so. So bottom line is the market's chopped sideways today. If you look at the first initial move up, that was the high. The second move down was the low. And you basically went sideways the rest of the day. Volume today definitely getting lighter, about 65 million per the close. And you can see here just a kind of a cool trend line. If you take this high from the gap down, connect it to that high, and look at how it goes right underneath these to here and right here and then right here. So that's just a short-term trend line to keep an eye on the intraday chart that'll give us a basis for if it breaks, then I think you get a little bit of a bigger sell-off versus if we go higher, obviously, as long as that trend line holds, then the markets can go higher and rally a little bit more. Okay? So again, overall, I thought the highlights of today was that, number one, the Chinese stocks continue to just be amazingly hot. Alibaba has just had a remarkable rally, folks. If you zoom out on the chart of Alibaba, take a look at this, right? Remember when we bottomed out on Alibaba around $110? I mean, for a company of this magnitude to hit a high today of 138.70, closing around 137.50, that's an incredible percentage move in basically, since the start of the year. So huge move up on Alibaba there. The K-Web continues to move up. Baidu had a good day today and up another $2 and change. And, I'm in from 124.20 on Alibaba. I still think it's going higher. I really do. This stock is so beaten down. I kind of was ranting about this for the last month or two of the year. But, if you look at even at the daily chart, yes, it's a nice bounce. And it is short-term getting extended. But, in all fairness, if you look at this longer-term chart, it's just had a remarkable downside from over $300 to, like I said, $110 or so at the lows. Now you're starting to get the move up. By the way, I talked about this in videos a week, 2 weeks ago, but this bullish pattern was just epic. I love where you have the sharp sell-off, the reversal candle, and then all these days digesting that big move up, never taking out the low. Beautiful bullish pattern right there. And you can see the result on Alibaba. Now, there is resistance here, which we basically touched today. But if you get through that, you have gap window. And eventually, I think it's going to gap fill. Now, I'm not going to guarantee that I'm going to hold it to gap fill because I'm not a longer-term trader like that. And that could still take, 2 to 4 weeks, which doesn't sound like a lot. But when you're in the money, north of 10%, it tends to be a little bit tricky, especially when dealing with the Chinese stocks, which you just never know if the government's going to come down hard again on some of these companies with another statement. But bottom line is, we'll enjoy the ride for now. Same thing on Baidu. Baidu, very nice move. We're in the money a little on that. Not huge, but decent little move now. And hopefully the rest of these Chinese stocks continue to ramp up. But again, just another solid day on the Chinese stocks to start the new year. Talk about a January effect. Again, we talked about how tax loss selling end of year really caps a lot of these names, that had been down all year, because then you have tax loss selling to offset gains for tax purposes. But once the new year starts, obviously there's no more chance to sell for tax losses. So if someone was going to sell, then they would have done it end of year. It takes a whole batch of sellers away. There's just not a lot of sellers left. And then you have any sort of positives out of China, and off to the races these names go. So cool stuff there. Continue to follow it and see how things play out. But again, so far, so good there. Going to the daily chart here, here's your daily SPY. And again, nice move up on that. Now, a couple things to go over here. Number one, you could see very clearly we had the kiss of this low right here, of this upsloping trend line. But I'm in the camp that you do have a little bit more upside on the spiders, but not a whole lot. I think this is your kind of cap right here, this consolidation low area. That should be your short-term high. And then I do think, again, I haven't released the next cycle date. I'm waiting till we're basically almost into it, or at least into the window. I recalculated it. It is next week. I plan on releasing it by Friday. But again, you're looking at further downside resuming in the not too distant future per the cycle. So again, I will keep you guys in the loop on that, and I will announce it either tomorrow in Thursday's video or Friday's video this week. Okay. Going to the QQQ, the NASDAQ 100, same thing. Decent little bounce today, about 0.5%. At one point, we were up more than 1%. Decent move. If you look at the low here to the high today, a remarkable percentage move for a very short amount of time. The question is, how high is this going to go? That's a tougher question. And again, I'm doing some charting here live with you guys, but you have this line here. I doubt it gets up that high, but that would be huge resistance. And then you basically have a small gap fill that never was filled right there. That could be a short-term resistance point, which is right around 396.50 on the charts, all right? So again, I don't know if it goes up that high, but that would be kind of, this is kind of my max upside. This would be ludicrous upside if it really just gets ridiculous momentum. But again, I could see it maybe getting up to this line here, as there's not a lot of other levels. You have this wide range bar now that we're in the midst of. Maybe this low could also be a little minor resistance at around 393.50 or so, 393.30. Okay? All right, so again, we'll continue to watch it. At this point in time, I would love to see a pullback like on TDOC. I'm sure some of you guys saw this, but you actually had a really nice move on TDOC to the downside today, and you still have this bottoming tail. So like if TDOC got below $80 tomorrow, I actually would be intrigued in terms of potentially picking up a small position again. NET at one point today got as high as 122. I still am holding it just because, again, we already took a bunch of profits, let a few of these things run. But again, you can see how that came back in. Same thing on SE. SE had a slight update. If this pulled back probably to the 183 level, I'd be interested in buying SE again. Square's another one we took profits on recently. That had a nice little pullback today. Same thing. If Square kind of pulled back right in this range here, I would say 139-ish, then I actually would be interested. So, if we get a surprise down day tomorrow, and listen, markets are overbought. There's always a possibility. The charts aren't telling me that. The intraday kind of was chopping all sideways today, which is bullish. But again, you could always have some sort of bad economic news. The bank earnings, I think, are coming out on Friday morning. That could be interesting for the overall market. And we could just continue to kind of just play it by ear. And that's the beautiful thing about charting, right, is that, you don't have to plan that far ahead. You basically look to see what's moving, what levels on that particular day. Is it a good level? Well, then you take the trade. Otherwise, you sit back and basically sit on your hands. All right. Going to the IWM. The IWM had a little bit of downside today, so while the NASDAQ and the S&P eked out a gain, the Russell did come down, and the culprit is basically pretty obvious here. You had Goldman Sachs under pressure and the bank stocks under pressure today. Take a look at Goldman. Down 3%. That's not a small move on Goldman. Bank of America today was only down about 63 cents, but still, that drop on Goldman was pretty sizable there, definitely under some pressure. And then that kind of petered through to some of the smaller caps. One of the things I noticed today is that there was a lot of kind of the mid-level stocks that reversed. We talked about how, TDOC reversed, which is kind of in that middle group. But also if you look at like Snapchat and some of these other ones that are kind of, they're billion-dollar companies, FSLY is another one. They had big bounces, but now they're starting to retrace. So you actually had a fair amount of stocks red today. You also had Microsoft up $3.50. Google up $34. So, you get those big cap tech names, and even Tesla had a nice day today, up about $42. Those trillion-dollar names are going to carry the indices like the NASDAQ 100 and the S&P, while the underlying smaller stocks, they're more showing themselves in the Russell. Okay? Speaking of FSLY, though, yeah, same thing. I'd keep an eye on this. You didn't get a bottoming tail on this one, but certainly It is interesting to me all the way down here. Now, I do eventually think FSLY goes and fills this gap, but that'll be in the next mega kind of crash scenario in the market where we, not crash, but when we drop another 10% or so, then you probably do see that fill that gap there, which, by the way, will be another great swing trading opportunity. I mean, the beautiful thing about stocks that are cratering, whether it's the Chinese names or whatever, when you get to key supports, the bounces are just tremendous. And we saw that on TDOC and SQ and SZ and NET, right? I mean, the bounces off of these levels are just incredible. Such big money makers percentage-wise in such a short period of time. All right. So let's go on to a couple other things here. I do want to go into the crypto markets here. So let's do that now. So we'll look at Bitcoin. Bitcoin continues to move up. So again, I've been in the camp, even though how to phrase this? So short term, meaning, 1 month out, weeks to month out, I'm bullish on Bitcoin until it hits 45,800 to 46. Midterm, which is like the next 6 to 12 months, I'm bearish on Bitcoin. I think it's going down to 20,000. I think it's going below 20,000 even. Longer term, years out, 5 years out, I'm very, very bullish on Bitcoin. Eventually, I think it's at 100,000, 500,000, maybe even potentially. So, bottom line is very short term, I'm bullish. I'm actually long Bitcoin in Verified Investing Crypto, if you remember there. In fact, we took a profit today on Polkadot, which is another cryptocurrency there. We had a nice 13% winner there. But again, Bitcoin doesn't have a lot of upside, really, in all fairness, only another $2,000 before it's going to run into a major level. Look at all these lows here. So again, I do think the upside is capped. These are much more quick trades, but certainly worth kind of keeping an eye on and certainly playing out to what I expect at the short term here. All right. Next up, let's take a look at the gold chart, the GLD. Gold continues to grind higher. God bless gold here. This is a beautiful move up, folks, playing exactly how I envisioned it in the start of 2022. I've called gold to be the best performing asset, or the metals the best performing asset of 2022. I think the U.S. equity markets will be flat to lower for the year. Bitcoin will ultimately be lower than it came into the year as well when all is said and done. And I actually think gold could be potentially north of 2,000, maybe even towards 3,000 by year end. Again, this is one of the most epic bullish consolidation patterns going on here. Take a look. Big move up, bullish consolidation for over a year now. So it's digested this epic move up. And what I would do, honestly, I would use a measured move on this, right? So if you do a measured move, you take this low at 111, we'll call it, to this high, which was at 195. And so that's, an 85, we'll call it an $85 move, a little bit off of that. But bottom line is, you should easily have another $85 higher potentially. Now, how long does that take? Does it take a full year? Does it take 2 years? I'm not sure. But I would say that that's the way these charts work. When you get a big move and then you get such a long basic consolidation, the move up can be a measured move here. So again, you look at where gold would be if it got there, and yeah, it would be getting kind of on the closer side towards that, maybe even above 3,000 an ounce. Now again, by the end of 2022 or 2023, that's trickier to know for sure. We'll just have to watch the charts and kind of just roll with it at that point. But I think that's pretty cool. Now, granted, we haven't broken out yet. I've been strict on saying that, is that we still have to confirm above this trend line here and really break out. But I do think it's on the verge. I think it is getting very, very close. I continue to hold my GDX, which had another phenomenal day today. I'm holding my GLD. I'm holding my Newmont Mining. Good positions, no doubt about, to be in. And if we look at Newmont Mining today, up another 60 cents. Newmont's actually come off beautifully off the recent lows. If it can take out this high, you got easy shot up probably here on Newmont, and then eventually your double top up here. Okay, so we'll continue to follow the gold chart. Silver had a decent little day today as well, although silver is into some resistance. This is definitely a level to watch on silver in terms of resistance. And in silver's case, you have the wedge pattern on the GLD, right? Well, you kind of have a same general trend line here, right? So you could make a case that this is your trend line on silver from this high here, right? And again, it's taking it from here, which was a higher pivot than here, so I think that's fine. But that would be your short-term big breakout on silver if it can get through that line and confirm, okay? Again, as I've said, silver's a little bit more mixed in terms of my ability to read it based on some of the economic issues with the industrial side and the economy and everything like that. But overall, with the money printing, and let's be honest, folks. I mean, again, I'm brutally honest with you guys and what I think. I continue to think that yes, the Fed will taper and finish tapering all the stimulus of the 120 billion a month. They'll probably finish that by March, I'm assuming. But do I really think they're going to be able to raise interest rates 4 times in 2022? Probably not. And the bottom line is, at some point, something's going to happen with the economy where they're going to back off so quickly. And we saw Jerome Powell come out and just say it yesterday that they would do that if they needed to. And do I ever think they'll wind down their balance sheet? Yeah, maybe they'll take out of the $9 trillion. And again, I think going into the last few years, it was like at $3 trillion or $2 trillion. And so to balloon in a year or so to $9 trillion is absolutely insane. But it is what it is, right? And the bottom line is, do I ever think they'll really unwind that? No, I don't. And eventually they'll have to print more money. And the U.S. debt speaks for itself. I don't see us getting out of that U.S. debt anytime soon, especially considering both sides of the aisle are, and anytime one side or the other is in power, they're all about spending, and then, the opposite happens usually when they're not in power. But, bottom line is the politicians, and I've always said this, and, one of the, I was on a show yesterday, and we were talking about how, China is really rolling out some crazy stuff in terms of, stuff that watches you and, everything's tracked. The digital yuan that they're rolling out for the Olympics, people are going to get cards with digital yuan. I mean, that's all about being able to track every single transaction that's done, which eventually the Fed will do too with the digital dollar. But, China always plays the long game because they don't have to worry about elections, right? And, that's as good as our democracy is with elections, and our democracy is amazing. But the problem with it is that when the politicians only worry about the next 4 years, they're always playing the short game, which never lets them play for the bigger positives. And again, it's how to fix that. I don't know. I'm not a genius in that respect, but you need people in power. I think elections are absolutely essential. I want to make that clear. Elections are absolutely essential. The democracy of the U.S. is absolutely essential. But at the same time, how to fix the problem where politicians are always playing in the short game so that they can get reelected, which is sending out checks to Americans, even if you arguably didn't need it, printing money and doing stimulus, even when maybe it's not called for, just to make sure that you can get reelected. That's the problem, right? And there's got to be some sort of fix that eventually is implemented, among many other things, let's be honest, with big business in there too, and funding a lot of the politicians. That's just never a good thing either. A shame that the Supreme Court allowed it back, years ago. But anyways, I don't want to get into this. All right. Bottom line is, my point is that, you look at what China's done and you look at things that they did years ago, or, and they're playing the long game, which is unfortunately why, as a citizen of the U.S., is that I'm concerned about China. China's eventually going to overtake everything, and they're going to be the biggest. They're going to have the reserve currency of the world is eventually going to be the digital yuan. I already see it, the writing on the wall. The dollar. By the way, one little fact, and I won't keep you guys any longer, but one little interesting fact is that if you look at reserve currencies, I mean, this is a great little project. Look up reserve currencies over the history of the world, or at least over the last few hundred years. You could even go back even further than a few hundred years. But if you look at it, the average span for a country to have the reserve currency is about 100 years. And that goes to France, and that goes back when France had the reserve currency. It goes to England when England had the reserve currency. And the U.S., guess when the dollar became the reserve currency? It was in 1920. Well, guess where we are? We're in 2022, which is 102 years. So, you just got to be aware. And again, the writing is on the wall, right? I mean, it doesn't take a genius just to look and say, okay, well, all this printing of money, all this debt, I mean, at some point, other countries are going to be like, well, why are we going to hold dollars? And China's already making the moves. They're already playing the long game. So, anyways, let's go to oil here real quick here. Sorry to get off track on that, folks. Sometimes my brain just runs. But oil had a nice move here. So you saw the USO breaking above this recent high. I'm not ready to add more SCO yet, but if it continues up, I absolutely will continue to build my position on the short side of oil. I continue to like the short side. I did want to bring up the actual chart of WTI here, and that's one of the beauties of having this secondary platform here. Here we can go here. We'll just look at this WTI here. So one of the interesting things about WTI that's worth noting here is that you actually haven't quite gotten back to the highs. So just an interesting little difference between the makeup of the USO and this. So I do think oil could get to this double top, but that is going to be a significant double top. And you're looking right around 80, just sub 80, right around $85. So again, just be aware of that, is that, we use the USO because a lot of you guys, this is a chart you guys can pull up very easily. But in reality, this is really the one. And I may start using this one more and more to really go over the charts of oil, as it's obviously a lot more accurate in terms of price action. But look at this move up in oil. I mean, just from this low here, tremendous. From 60, low here of $66 back to 80, almost 83 today. And again, really, in all reality, the double top hasn't been hit yet. So you had the USO taking out the high, but in reality, the actual WTI chart hasn't taken out the price high there. All right, you guys have a wonderful rest of your day. As always, thanks for being members, and let's see what tomorrow brings. Have a good one.